All right, good morning, everyone. Sorry about technical issues. All the servers and everything were down this morning. Long ride to get everything back up. All right, long weekend. Let's get it started. Okay, we had obviously had on Friday session. We kind of had a bit of a drift up again. Not any huge leadership outside of healthcare. Really pushing up to the highs of the sessions on the day, but nothing significant. I mean, it's a small move. Still kind of feeling like it could be a bit of a decade bounce after some of the intense selling that we had seen maybe the week before. But yeah, bottom line is we did make it a little bit of a bounce. We'll have to see how we can play out after the weekend. I mean, there's very little leadership going into the weekend. We had AMD and Halliburton that both rallied on better than expected earnings. Last night we also saw Netflix with better than expected earnings as well, up about 7% after the bell. Yeah, and then we continue to see that some of these numbers are pushing a little bit higher. After the rough winter weather season that we saw in the States. All right, in Asian sessions, we saw really very small moves on either side as well. You can see there the biggest move we had was actually up 0.4% out of Oz, and then we saw the Hang Seng, which is down a touch, and Shanghai was down. It's just total mixed bag, no leadership, nothing to really take out of it. We did see the yen that weakened a little bit on Monday. On the back of on some of the numbers there. We also saw we've got a big week coming from China, I think, with the HSBC PMI numbers that are coming out on Wednesday. I think that those are going to be incredibly important. It seems like there's a hell of a lot of focus going into that ahead of that, and also we've seen kind of a heightened watch as well with this corruption scandal that's happened here recently, and we continue to see more and more of a clampdown there on officials and things like that in China that are obviously getting people more and more worried about how things are going to pan out on the economic side there. All right. We also saw. Sorry. Let's go into next slide here. We've got a little bit of a long in the tooth, I would say, business cycle. So the average business cycle, if you look over the past, since the 1980s, 1960s, call it, you can see there that's what the average business cycle is, about 58 weeks. And we are, let's see here, I think at the moment, 58 weeks. So yeah, we're starting to get a little bit stretched. I mean, I would say when you say stretched, you can't really say that 58 stretches the average. But bottom line is we've hit what the average length of economic expansion is, which is somewhere around 5 years, and we're going to look to kind of see how that plays out going forward. But I think bottom line is, this has been a bigger protraction than we typically saw back in 2008, 2009. We'll probably see a little bit longer expansion on the back of this one as well. But it's an interesting point nonetheless. All right, corporate action out today. We got McDonald's out before the bell in the States. We got Comcast, United Technologies, Gilead Sciences, Amgen, and AT&T. All right, in the economic calendar, we've got we had the Japanese leading index numbers this morning. We've got the Red Book numbers out of the States. We've got housing price index. We've got consumer confidence, existing home sales, and Richmond manufacturing. So nothing too exciting in terms of market data, and nothing too exciting in terms of earnings either. And I think really we're just going to kind of see a quiet start to the week this week, really on the back of probably the longest weekend of the year. In terms of most global markets shut down for as many as 4 days, and we'll have to just follow the action this morning and see how things get started. All right, let's have a look here at the maps. The first thing that we want to look at is is the gold price. And really what I want to look at is this level here at 1280, sorry, at 1280 in the gold price. We talked about this the other day. I think on Thursday, the data in the States has really started to turn really strong as of the last month or so. And, I think that as that continues, there's going to be one thing that's going to be really clear cut, and that's going to be that at some point the Fed's going to have to pull their foot off of the gas a little bit, and maybe sooner rather than later if the data continues to improve the way it has. We dropped down through the 200-day moving average a couple days ago on the gold price, and really it's 1280 where we kind of bottomed out on the pullback from the March run up. Is the last sort of level that I see until we could see something significant to the downside here. I potentially don't see any way, so long as the data is improving, that the gold price can run higher. I am short of a couple of the gold stocks that I started shorting on at the end of last week once I really just realized how strong all the data was in the States. You saw the gold price really kind of collapse over the last, not collapse, but pull back over the last few sessions. And like I said, if we drop below 1280, I think there can be a real momentum. On the back of that, we'll look at some of the gold stocks and some of the setups there. A lot of head and shoulder setups you can see here. These are looking at the U.S. tickers. That's Gold Fields in the States. You can see they're really kind of putting in a bit of a head and shoulder setup. If I look at Harmony in the States as well, that's there we go. You can see also making a kind of a head and shoulder setup. Probably needs to drop, at least $3, which is where the previous low was. We actually came down and tested it last night. In fact, all the gold shares bounced quite a bit last night at the end of the session in the States. Still down on the day, but they bounced quite a bit. Oh, sorry, actually Harmony was actually green on the day, but. Bottom line is the setup's looking ominous. I really, it's hard to see. It's hard for someone to even spin a story, for gold prices to really run this year. And I think that these could be a really good opportunity at some point if we drop out the bottom of these patterns. All right. Next one. Let's look at Kumba. I know we looked at. I think we looked at this one the other day. But 400. There were two levels of significance here. There were 400 and there were 385. 385 being the November bottoms, which we did drop out of obviously in March. We kind of came up and retested around 400. Couldn't make a move north of 400 to fill the gap here. And really what happened was Friday, obviously, there's some really bearish stories out on the local iron ore output numbers potentially. I know that the production numbers for some of these guys, like the likes of Kumba, I believe, are coming out this week. Interestingly enough, Kumba was down about 5.5%. I think it only closed down maybe 4.5%, but down as much as 5.5%, close to 6%. And Anglo's actually managed to close green on the day, which is really interesting. But bottom line is we broke out we came up and tested resistance at 400. We failed it, and we've dropped out of this flag pattern. It's a really convincing setup here, I think, in Kumba. This is looking very likely, provided the market conditions support it, and we don't get any, and we don't get better than expected numbers later this week. This thing's starting to look like it's going to be able to come down here and test the lows pretty soon. All right, Impalas. Impalas has been in this setup for 6 months. This little narrowing wedge pattern. I'm actually going to draw it like this simply because I felt like it had broken out there the other day, and then it came back down the next day and failed it and re-entered this little consolidation that we've been looking at. It's literally been impossible to get anything definitive. You can really see here by the size of Friday's move in the green bar, and we really had that I'm aware of, no real catalyst to really push it up through 120, but not only did we push up through it, we pushed up convincingly through it. We closed above 122. I think finally this thing might be ready to go, probably because there's not one guy in it anymore. Either way, there's a hell of a nice upside target on this share if we can continue to hold above resistance here. And the last one that we're going to look at is, Aspen. Aspen kind of looks like, we talked about the other day, we talked about this this little flag pattern that we'd set up into, and it kind of looks like it's popped up out the top of that. Let me zoom in a little bit more here for you. But you can see there, I mean, it's marginal, but either way, we either right there, we've closed just through it. I'd like to see something a little bit more convincing, and to be quite honest, I'd like to see us get up through at least maybe 279 for us to really get some sort of confirmation. And if it gets up through there, then I think you can own this one. I think this one it's put in a long consolidation here. When you look back, I mean, this thing is trading at $280 all the way back in October last year. In fact, it was in September. It was already kind of consolidating up north of 270. So this thing's put in a lot of time now, about 6 months of more or less sideways action, and it probably could make a nice breakout here if we can get above 279 and Aspen. And that's it for today, guys. Thanks a lot.